Hello everyone, I hope you are doing good. Today we will be talking about two important topics. First, I will be talking about current stock market situation. Are we in a recession or is it a good buy the dip opportunity? What I will be doing is I will be comparing current scenario with two previous scenarios. One is 2015 and second one is 2008 2009 market crash. So I will try to compare current scenario with both these two previous scenarios and see which one correlates better so that we will be better prepared for going forward. Are we supposed to do something about our long term portfolios, or are we happy and we should buy more and buy this dip? See, we can't predict the future, but we can analyze how other traders perform in history, and there's good chance current traders might perform similar way. So we will be better prepared if we have this knowledge. I usually don't make videos such like these, like where I talk about how the spy can perform going forward. So but this time I felt I had some data point I wanted to share with you guys, so it might help you guys as well. So if you like this video and gain any knowledge out of it, please like this video so I will know you like content like this, and also comment below your feedbacks. And second part, I will be talking about my last week trade as usual, my double calendar spread trade which I took last week, and how much profit and what my strike prices and everything about that. So now let's start the video. So currently, since start of 2022, we guys know we are just selling off. So we have the SPY has already shown downward movement of 15.6, like some 15% already we are sold off by today. So is this a good time to buy stocks, because most of the stocks are 50% losses? So is it a good time, or are we heading towards recession? So now I will compare this with two another scenarios like 2015 and 2008 scenarios. So what I've plotted is this is SPY, and I'm also plotted this is a 200 moving simple moving average. So as you can see, we touched all time high on 4th of January. Then we went down and we moved around this 200 moving average. Then we bounced back, but we didn't were not able to hold it, and we drastically fell down, and it happened twice. Although this was second time we were not as low as this guy, but we tested it twice and then we recovered back. But this was a fake rally, so we were not able to hold to 200, and we were not able to. We got rejected here, and we again fell down here, and here we were able to respect this previous low value. So it was, I have plotted the lowest value of this candle, and if you see, we were able to hold above them. So this is like current scenario. Now let's go to 2015. So this is 2015 graph. So as you can see, this was like 2015 highest point is somewhere around here. So around 21st of May 2015, we were like all time highs. Then we went down, we tested 22,200 moving average, and we bounced back. Same how we are doing here. So we tested 2,200 moving average, then we bounced back, but we were not able to hold this, and we fell down drastically. So here also it happened same. We were not able to hold it, and then we fell down drastically. Then again we fell down, but we didn't reach as low as this level. Okay, now here also we fell down drastically, but we didn't go second time we didn't go as low as this level, and then everything was recovering here. Here also, after this we were recovering, we thought everything is looking fine, and we started recovering. However, here we got rejected at 200 moving average, and we again went down. But good thing is we were able to hold this. So I have plotted this line. This line is exactly at the low of this candle. So you can see these two candles, both the lows we were able to hold above it, so we closed above it, right? In current scenario as well, so this line have plotted exactly at the low of this candle. So once we got rejected at 200 moving average, we tested this twice and we were able to hold this level, so this is a good support. Now if we see in 2015, so if this is like yesterday, like Friday, then going forward we just bounced back. We had a very good stock market rally, and we never saw this level again. So this was a very good time to buy the dip. So is this the current scenario as well? So we are here and now we will see a good rally and we will not, never see this level again. So this is one scenario and it correlates very well with 2015 case. So this gives us one information. Now let's do another scenario, which is 2008 crash. So this is 2008 crash. We'll see the graph again. So we were all time highs around 11th of October 2007. Then we went down. We tested this 200 moving average and we recovered little bit. So same here also in like current scenario. We went down, we recovered little bit. We were not able to hold it and or go forward, and we crashed drastically. So here also we went up, we were not able to go up further, and we crashed drastically. Then again we started recovering little bit and we saw second bottom here also. Sorry. So take this back. Okay, so once we, this is current scenario. So once we are back, again we had second, tried to have second bottom, and after that we recovered very well. So here also after this second bottom we recovered very well, but again at 200 moving average we were not able to cross that and we got rejected here. So here also it is not exactly same, like we did go about 200 moving average little bit, but again we came back. So it can't be exactly same, but it is almost similar. And then you can see we had a drastic sell off and we moved down, then again little bit up and again we moved down. Here also after this 200 moving average rejection we went down again with little bit, and this was the second time we are seeing this low. So if we compare with this point, there's one difference. Here we were not able to respect this support and we cracked this support here also. And again when we saw another uh, downward pressure, then also we didn't show some support here and we were able to crack through it. So in that scenario, if you see, this is little less, I will say, correlating to current scenario. And as far as I remember, this was the Fed meeting day, the 19th of September, and it was like nothing was changed. Like the at least the interest rate was not changed; it was kept same. And then we saw a big move in the SPY that day. So it was 3.35%, 3.37% up that day. But this was a fake rally, and then we saw a very big drop from next day. So here also we saw this big move after the Fed meeting, and then we are seeing this downward movement. So in that scenario, there is a possibility that we can see this downward move, but I will say this 2008 case is less analogous to what it is to 2015. In 2015, we can see we are able to hold this support, but in this case we were not able to hold the support. So I'm seeing this little less likely than compared to 2015 case, but we never know. So what I will be doing going forward, I will be watching this level and also this 2404 level very closely, the low of these two. Actually there was a support here. So if we go below these levels, then it will ensure that it is going towards more downward pressure is there, and there's a good possibility we will go into recession type environment. So if we go below 200 or like 404 and we are closing there, then I will try to hedge my portfolio, my long term portfolio. So what steps would I be doing? First, I will be buying puts. I will be buying puts not to make profit. This is just for hedging purpose. Okay. So what I will do is I will buy puts, maybe let's say 400 strike prices and some June or July expiry, some mid June like monthly ones. So I will choose those strike prices and expiries. So June or July you can pick, and I will go little in the money. So 400 will be a good one. Little out of the money, sorry, just little out of the money. So I'm going at 400. You can pick somewhere like if you want little cause safer, you can go at 420, 410, like that. I will place little since we are going down, so 400 might be a good round of number. So I'm thinking to go with 400 strike price puts, and I will buy somewhere, so that I'm able to hedge my portfolio. This is one strategy. Second strategy, what you can do is you can start selling your risky asset first, your risky stocks. Maybe you have some debit spreads, called debit spreads, or you might have some, let's say, TQQ, or those type of things you can start selling off now. And if you see more downward pressure, if we are going down further, you can start selling other part of your portfolio. But my recommendation won't be to sell off your portfolio first. Your tax will go up a lot if you are still in profits. So say that's why I would prefer to buy puts. So I buy a few puts. Not just, my intention won't be to make profit out of this sell off, just to hedge my portfolio. And once we are down and we see some recovery happening, then I will use the profit I made out of puts to buy back, you know more stocks. So that will be my thought process going forward. And if we go up, if we bounce back from this, then it will be a very good opportunity. I will start buying more and more stocks going forward. So this was my analysis. Let's see how it plays out. We can never predict the future, but it is just, we are equipped with all the information, and there's a highly likely, like, we can get some knowledge how the previous trader performed in history. There's a good chances how the future trades might happen. So we will get at least some knowledge out of it. So we will be better prepared. Now let's go to the second part of my video. Like, let's talk about the calendar spread. So let me go back to my SPY calendar. Let me just reload it. Okay, good. So last week I've bought this double calendar spread on 29th of April 2022. The time when I entered this trade, SPY was moving around 422, 423 points. So we were somewhere here. So if I have to move this, so if you see, we were somewhere here that time. If you see, this candle was little up also. So we were around 422 that time. Let me move this candle back. So I bought this double candle around that time. First, what were my strike prices? So before that, let me first take out what were the dates, because based on that I would pick the strike prices. So since I entered on 29th of April, this was the day. So as you guys know, I go 3 weeks far. So I am entering in 29th. So was selling 20th of May options, and I was buying 27th of options to create the calendar. So my pair was 20th and 27th, calls and puts, to create these calendars. Now, what were my strike prices? First, as usual, I'll see what is the at the money straddle price on 20th of May, the selling leg. What is the at the money straddle price? So, as far as remember, it was somewhere around 22 points or 20 points, somewhere like that. So, what I did is I made little extra cushion, and I thought I will place my double calendars, upper and lower calendars, 25 points far from the at the money. So we were around like 422. So if I add 25 to that, it will be 447 or something. So just to round off, I placed it at 445. Also, there was some sort of resistance around 440 and 442 here. There's some sort of resistance here. So that's why I thought, okay, 445 will be a good place to upper calendar. Similarly, since we were at around like 422, the downward side again 25 points far just to make it symmetric, and I made it rounded off to 395. So 395 was my lower calendar and 445 was my upper calendar. And going forward, as you can see, SPY didn't move much. Like it moved a lot, but it didn't go as 445 or 395. And I exited this trade on 6th of May since I met my profit target. So let me show you my day to day how this strategy performed. So I entered on 29th April. These were the two strike prices 395 and 445 as I showed you here. The dates of the calendars were selling 20th of May and buying 27th of May. These two calendars were costing $169 at the day of my entry. Then on 29th April on 2nd of May, this double calendar was in a profit of 1.78%. On 3rd of May, it was in a loss of 1.78%. On 4th of May, it was in a profit of 1.78%. So we were just toggling around. Then on 5th of May, this double calendar was in a profit of 4.73%. Then on May 6th, when I exited, this double calendar was in a profit of 10.65%. And as you guys know, whenever I see 10% plus profit, I exit the trade. So I exited this trade. Just for documentation purpose, on the closing of May 6th, this double candle was in a profit of 12.43%. So, but I was happy with my 10% profit, so I exited the trade on May 6th. Going forward, can go further up or down, but good thing is we have locked our profit. Now let me show you my profit calendar for 2022 as till today. So we are doing good. So January was good, February was 25%. If March was little rough and we made a loss of 3%. Then April was good, we made a profit of 11%. And May just started and we are in a profit of 10.65%. So if you are interested in things like that, like 2022 was rough from the start, and even after that we are making some good returns. So if you like content like this, like we never know where SPY will move tomorrow after a week or something. So playing any directional moves are hard. So that's why I prefer to do calendar spreads. And good thing is these are safer. You don't make big losses here. It is a consistency game. Every time you keep on doing these 10% profit, you keep on collecting, and eventually your portfolio will go up. These are not like multi-bagger strategies. These are consistency game strategies. So that's why I do it regularly. I'm doing it and I'm making some good returns. So if you are also interested in double calendar spread, learning more about it, what strike prices, how to tackle them in different scenarios, do subscribe to my channel. Also, there is a complete guide video you can see on top of your screen. There, I have covered everything about this strategy. So, please check out that video. And if you want latest update about my trades, you can follow me on Instagram and Twitter. I have put the link to my Instagram, Twitter in the description below. So there I post my latest trade whenever I take any trade. So you can get that idea from there. And also please like this video if you gain any knowledge out of it. And also please comment about this stock market analysis which I do. What is your thought process? Are we going into recession or is it a buying the dip? And if you're buying, which stocks are you buying? So that's it for today. I hope you will make good money out of these scenarios currently and you are staying safe. Don't panic a lot. Hedge your portfolios if we enter into any recession type scenarios. So I will wish you all the best in your financial journey, and I hope I will be able to give you some knowledge. Thank you. One disclaimer: all the information which I share on this channel is for your knowledge purpose only. Thank you.